Hi friends, in this video we'll learn how to deal with bad debts and how to create a provision for bad debts. We'll learn how to deal with bad debts when existing provision for bad debts is not there and how to create a provision for bad debts. Let us see the problem. Trial balance as on 31st March 21 is given to you. Debtors 20 lakh is the balance given to you. Bad debts is given with a debit balance of 1 lakh. That means an entry has already been recorded for bad debts. It has already been subtracted from debtors. So this debtors is after this bad debts of 1 lakh. So this is a extract of a trial balance, a particular portion from the trial balance. You are given some adjustments. Create a provision for bad debts at the rate of 5% on debtors. So how to deal with this when you are doing a final accounts problem? Let us prepare a small P&L account, profit and loss account for year ended 31st March 21, and then we have a balance sheet as on 31st March 21. We are having debtors, I'll show in the inner column 20 lakhs, and we are having some bad debts in the trial balance. We don't have an existing provision for bad debts because in the trial balance it is not given anywhere. That means there is no provision for bad debts already existing. So this loss will be transferred to the P&L account. We pass the entry P&L account debtor to bad debts. So bad debts will be transferred to the P&L account. The entry we have passed is P&L account debtor to bad debts to close the bad debts account. Okay. Now we are asked adjustments. Create a provision for bad debts at the rate of 5% on debtors. So in our earlier video we have seen what is the entry we have to record for creation of provision for bad debts. So I'll pass an adjustment entry now. We have to set aside some profits to create a provision for bad debts. So the entry would be profit and loss account debit to provision for bad debts. So what amount? Debtors amount is 20 lakhs, on that 5%. So it will be 1 lakh rupees. This is 20 lakhs into 5%. This is a loss which we expect to occur in the future. This is not this loss. This loss has already happened. This amount will be collected in the future, and out of that we expect 5% will not be collected. So it is 1 lakh rupees. So what is entry we pass? We pass the entry profit and loss account debtor to provision for bad debts. So in P&L account will debit to provision for bad debts rupees 1 lakh. This is the entry we pass. Now what will happen because of this entry? A new account will be opened in the background. Provision for bad debts account. This account will be credited. We will be transferring some profits to this by P&L account rupees 1 lakh. Now this account is showing a credit balance. So this account is showing a credit balance. Either it has to be shown on the balance sheet liability side, or we show it as a subtraction from debtors. Less provision for bad debts. I'll just write a shortcut PBD rupees 1 lakh, and the balance amount will be shown in the outer column 19 lakhs. So this is how I show it in the balance sheet asset side. So provision for bad debts will be shown on the asset side as subtraction from debtors. Next year, in the next year's books, what will happen is when we open the books of accounts for next year's debtors account, 1st April 21, that is the beginning of the next year, I'll open with the full balance. To balance brought down 20 lakhs, and provision for bad debts account will reopen with a balance of provision for bad debts account will reopen with a balance of rupees 1 lakh. So for the sake of showing it in the balance sheet, we show 1 lakh as a deduction from debtors. But next year when the accounts are opened, the debtors account will reopen with full balance, and the provision account will also open with the full balance. So this is how I deal with creation of provision for bad debts for the first time. In this problem, I debited the bad debts to the P&L account because there was no existing provision for bad debts. The provision of bad debt which we have created is for the future and not for meeting the current loss. Thank you.